The accounting equation. Often the relationships between assets, A, liabilities, L, and owner's equity, OA, are shown in terms of a formula. The total assets of the company equal the sum of the liabilities and the owner's equity. The formula depicts the relationships of the various elements of the balance sheet. Balance sheets are often set up with the assets on one side, the left side, and the liabilities and equity on the other, the right side. Understanding the balance sheet. As you know, in a business, the first list of items is called assets. Assets are valuable resources owned by the business and can be either short or long-term in nature. Your second list of items is called liabilities. Liabilities are what you owe to others for resources that were furnished to the business. The parties to whom the company owes money are normally called creditors. Your third list can be labeled owner's equity. Owner's equity reflects the amount the owner has invested in the firm. The amount of money provided directly by the owner or other investors, called owner's investment, and the amount retained from profits, called retained earnings. Let's look at an example. The Solana Beach Bicycle Company is a small business that makes, repairs, and sells bicycles. Samantha Fernandez started the company in January 2013. Sam has been an avid bike rider for many years and always felt she could build a better mousetrap or bicycle, that is. Sam invested some money she had saved and some that she had inherited into her business. Please follow the image. Please follow the image. By looking at the bicycle company's balance sheet, you can see that there are several assets belonging to the company that together are valued at £93,385. You can also see that the company has several liabilities, valued at £23,000. Finally, when you subtract the liabilities from the assets, you can see that the company has equity, also referred to as net worth, of £70,385. This represents a combination of the amount of money that the owner has invested into her business, £60,000, and the profit that was earned and retained in the business since its inception, £10,385. Since this is the first year of business, all of the profit must have been earned this year. What does the date on the balance sheet mean? There is a great deal of disagreement about how accountants arrive at the values shown on the balance sheet. Of most concern are the values attached to the assets and consequently to the owner's equity or net worth of the business. The balance sheet represents a snapshot of the business's financial position on that specific date. In the case of Solana Beach Bicycle Company, this point in time is December 31, 2013. Summary. A balance sheet is a formal document that follows a standard accounting format showing the same categories of assets and liabilities regardless of the size or nature of the business. A comparison of balance sheets provide a good picture of the financial health of a business. An asset is a resource with economic value that a business owns, expecting that it will provide future benefit to the business. A business's liabilities are obligations the business owes. Owner's equity reflects the amount the owner has invested in the firm.